But there is a massive short position in silver. How is that? Because people who hold dollars essentially hold gold and silver substitutes. So in order to hold dollars, you are short silver. So the short position in silver is much bigger than the LBMA realizes because they don't understand that silver is money. Well, hello there, my friends. Rafi here from the Endgame Investor coming at you with the second weekly silver report, and I'm excited to share with you some very interesting news. This happened just to the south of me yesterday. On November 23rd in Jerusalem, a half-ounce silver coin was found. On the front of it is Old Hebrew, and it says Yerushalayim, or Jerusalem. On the back is the seal of the high priesthood, the Kohen Gadol of the temple. It says Holy City on the back. This is a half-ounce coin about the size of a $50, minted in around 68 of the Common Era, 2 years before the destruction of the temple. This is the 30th half-ounce silver coin that has been found in good condition, very little tarnishing, and shows you, once again, how silver is money, has been money, will be money. And that's it. What has been going on in the silver market today, this week? Some very interesting stuff happening in Turkey. I want to show you this chart. We all know by now, I'm pretty sure, that the Turkish lira is in free fall. That country is experiencing hyperinflation as its currency, as its money substitute is dying, and people are dumping it in favor of gold and silver. Now, the odd thing here is that the Turkish lira in gold terms has gone up about 5.5%, which you can see in this little chart below here, since 2012. This is a 5-year chart. And up here in silver, it's gone up also 5.5 times. So if you've held your money either in gold or silver, you have preserved your purchasing power, and you would have no problem getting basic necessities now while people are scrambling for food and basic necessities, your neighbors, etc. Question is, why is the Turkish lira down the same exact proportion in gold and silver? And I will show you that now. You can see in the gold to silver ratio from that same date, November 2016, 5 years ago, the gold to silver ratio was 74.13. You can see that over here, this level. Now, when we get to November 21st or 22nd, 23rd, whatever date it is, we are now at 74.34, basically the same number. So the gold to silver ratio has not changed in 5 years. And since the dollar is the reserve currency of the world, not the lira, in order for silver to outpace gold in a hyperinflationary scenario, it has to be in the dollar itself. And that is what will happen when confidence finally in the dollar is lost. Silver will outperform gold, as it did in 1919 and 1980, when consumer confidence reached a new low and confidence in the dollar itself was on the verge of collapse. And when consumers start to distrust the dollar and they need actual gold, they're not going to be able to afford it. So where will they go? They will go to silver, and that's when you will start to see silver outperforming gold, as it did as the dollar was in collapse in 1980, and also during the inflation of the post-World War I period in 1918, 1919. That was the last time since 1980 that the gold to silver ratio descended to 15-1. Why? Because it was the currency itself, the dollar itself, that was being doubted, and that's when consumers went to silver, not to gold. Who goes to gold? Banks and big companies and capital movers. But the public that needs to buy food, they go to silver. And there's a lot more of them than there are rich people. And that's why silver will outperform gold when there is a panic in the reserve currency. For now, both are stable, as both are stable in dollar terms, but that is not going to last. Let's go to the next slide. Here we see coin premiums still rising from last week, and they're hitting new highs for the year. Here we have the silver American Eagle. And before you say, oh, it's just the silver American Eagle because the US Mint is so incompetent that they were shutting down their machines and now everyone wants a silver Eagle and they're trying to jack up the prices, it's not just the silver eagle. Let's go to the next premium chart. This is the silver maple leaf from Canada. We also see here, yes, the premiums are lower because the Canadian mint is slightly less incompetent than the US mint. That's true, but still we see here the premiums, meaning the discount on futures really, is at a high for the year following silver squeeze, which happened right here when the premiums hit a low in February, and it is working in silver maple leafs and in silver eagles, but it's not just that. Check this next one. Even junk silver, the 90% silver coins you can get in those junk bags. Look at the recent rise in the premium from about 15% now to 17.2% over the last 2 days when silver had a minor sell-off. And we're going to talk about that sell-off in a second. But you see here, silver squeeze, February, premiums on 90% junk silver rocketed and then rocketed again. And they have been trending higher and now they keep climbing. So yes, this is working and I wouldn't worry about the futures price right now. What about this sell-off that's been happening for the last 2 or 3 days? Well, that can be explained by major delivery day coming in 2 trading days. The situation on the COMEX is as follows. We have 19,600 contracts worth of silver in registered category in the vaults. Open interest in silver right now with 2 days left to expiration is 31,028 contracts. Traders have 2 days to roll over or stand for delivery. Will 19,600 contracts be drained? I doubt it, but there could be a big hit this month because it is a big delivery month. The biggest of the year could be. The recent sell-off is bullion banks trying to discourage delivery and encourage rollover. As someone who took delivery of a silver warrant, I can tell you how tanking silver prices when you're about to take delivery of a warrant is very discouraging, and it encourages traders to roll over to the next month rather than take delivery because they'll have mark-to-market losses. But the question is, when do these delivery day smashes stop? And the answer is when lower prices encourage delivery rather than discourage it. When traders no longer care about the price that they're paying for the silver, they just want the silver, whether that is a commercial user that needs silver for their industry, or it's a retail trader who wants to take delivery of a warrant because they want the physical goods for money. If lower prices actually encourage delivery rather than discourage it, that's when these smashes will stop. And I will show you the history of these smashes for this last year in the next slide. You see here, the lines, the black lines point to first notice delivery days. You see here, December, there was a big sell-off. December was a big delivery month, December 2020. You see another big sell-off in March 2020, this line here. And another low in silver happened in April 2021, March 2021, and then February 2021, silver hit a low around first notice in April. And then another sell-off briefly here. And here in October, for October silver, we had a big sell-off and then we took off. So the fact that silver is selling off now, right when we're about to hit December deliveries, which is traditionally a very big month, it is not surprising that silver is experiencing a brief sell-off at the moment. Now, there is something else that should be noted that is extremely rare, that only has happened 5 times in the last 21 years. And that is the dollar index has hit overbought territory for the 5th time since the year 2000. Remember the year 2000, 2001, when the dollar index was at humongous highs and the dollar was very, very strong. That was because there was still some semblance of fiscal responsibility back then, when there was sort of a balanced budget, but not really. That was the first time this millennium that the dollar index was overbought. The next time it was overbought was at the peak of the great financial crisis of 2008. Overbought here by the 14-week RSI means a number over 70. It was overbought again in 2010 when the dollar index had a brief blip. And finally, the last time it was overbought was at the peak of the 2014 oil crash when the dollar index was climbing like mad, and it was overbought here for about 6 months. That was huge. Since then, nothing. Not even during the March 2020 COVID sell-off of everything and dollar panic of that time. Did not reach overbought, just hit 70, but now for the first time in 6 years, the dollar index is overbought. Is it going to stay here? Probably not, but we could be on the verge of some kind of liquidity event, which this is what it might be signaling. And what's going to happen when we hit a liquidity event? The Fed is going to have to print even more, and the dollar is going to be toast. How much longer do we have until that inversion? Don't know, but it's coming. Now, I wanted to comment on the LBMA's, London Bullion Market Association's, take on the silver squeeze movement and show you why they are completely wrong, logically speaking. Here is what the LBMA wrote about silver squeeze, trying to brush it off as nothing and a bunch of ignorant apes that don't know what they're doing. This is chapter 3 of the LBMA's report on the silver market 2021. Here they have a subsection called the social media storm. By this, they mean silver squeeze. It starts, the events of late January, early February this year have almost become folklore in the silver market. It is worth recalling how this emerged and its impact on retail buying, even after the social media storm faded. First, here in this paragraph, they talk about GameStop and how GameStop bled into the silver movement. Buoyed by this success, social media discussions soon focused on silver, and in particular, long-held conspiracies that financial institutions were holding significant short positions. For many, the resemblance to GameStop was all too apparent, albeit erroneous. Buying of silver bars, coins, and exchange-traded products quickly ramped up. Here, they say, although the silver price achieved a 6-year high of $30.10, the social media frenzy quickly faded. Dynamics in the silver market are quite different from, it really should say from, this is bad English, quite different from those behind the GameStop trade. In essence, there were no massive short positions in silver to force out. That is the sentence that I want to challenge on a logical basis. The LBMA claims there are no significant short positions in silver to force out. I contest that on logical grounds. Now, it is true that if you look at the COT reports, the Commitment of Traders reports on the CME, on the positioning in the futures market in silver, there are not that many bullion bank shorts. That is true. Those shorts are in gold. But there is a massive short position in silver. How is that? Because people who hold dollars essentially hold gold and silver substitutes. So in order to hold dollars, you are short silver, because when the dollar collapses, people buy silver. And I've already showed you this in 1980 and 1919. And in 2011, when consumer confidence really plummeted because of price inflation going out of control, that's when the public cornered the silver market and dumped their dollars. They were trying to cover their own short positions in silver because they had too many dollars and not enough real money. So the short position in silver is absolutely massive because there are way too many people with inflated silver substitutes. And when people realize that they have to get rid of these substitutes and buy their silver back, that is when you get a short squeeze on silver, and that is what a silver panic is. So the short position in silver is much bigger than the LBMA realizes because they don't understand that silver is money. And most of the public doesn't get it either, but they will get it. And when they do get it, you'll have a big dump and a big bump in silver. And that will be the end of the monetary system. This is Rafi of the Endgame Investor, happy to be part of Arcadia Economics. And I wish all of you a happy delivery day on Monday. And of course, happy Thanksgiving.
Well, thank you very much, Rafi Farber, for this week's The Endgame Investor weekly silver report by Rafi Farber, who has his financial column that he writes daily on Seeking Alpha, and the link for that is in the description field below. As I've said multiple times before, and there's a reason why he's one of the first people to start doing his own segment on the show, is that if I only could read one column daily to stay up to date on what's going on and have a lot of good trading ideas, investing ideas, or just feel confident of why I'm holding my gold and silver, Rafi's The Endgame Investor is the one that I go to. A lot of great columns out there, but Rafi writes a great daily column that people can actually understand regardless of your experience level. So thank you again, Rafi. Great report this week. And also, I might add that your column today in the Endgame Investor, where you talked about the upcoming December gold and silver deliveries, was quite interesting. Anyway, thank you all for being here. Thanks, Rafi, for another great report, and we will see you again next week.